Hey, how's it going everyone? I'm going to go over the daily plan and the live market commentary I provided through StockTwits, as I do every day here on YouTube and as I provide every day through StockTwits. I'll leave a link to my profile on StockTwits in the description, and I just want to say thank you to everyone here on YouTube that has been supporting the channel. It really does mean a lot when you guys leave likes and subscribe, so if you do find value in what I am posting, would mean a lot if you guys could like and subscribe. So, beginning here, creating a daily plan, step 1, checking out the overnight TPO. Lots of things to take here, folks. Look at where we're trading. Remember last time we were here, spoke about this range extensively on StockTwits as well as YouTube. Look above, below, profiles, lots to be derived from our TPO. So, TPO charts, what are they? They stand for time price opportunity charts. Oh, sorry. I've been posting all my executions here. And if you watch yesterday's market recap, I said I didn't take a trade, and that is because, as of the time of recording, I did not take a trade. But I ended up taking a trade, so here it is. Alright, TPO charts, time price opportunity charts. A lot of traders like to say that trading is, all about volume and price, right? You always hear volume price analysis, yada, yada, yada. But there's more to that. Time is just as crucial in the markets, and time price opportunity charts have nothing to do with volume. Now myself and my charts, I do have the volume by price to the side, but traditionally, right, TPO charts themselves are just these market profiles, and so these are derived from time, not volume. So why do we use a TPO? Why don't we use candlestick charts? Everyone uses candlestick charts. Well, with TPO charts, we could gauge, and it helps us visualize or make the market auction more palatable, right? So things that we're looking for are the shapes of the market profiles. There's a whole bunch of different shapes we could see, as you guys can see here, right? So each one means something slightly different. We also look at value area highs, value area lows, points of control, all of these things. When you know what to look at, the TPO charts are a great tool. That's why I start with them every day. You just look at a quick glance and you know what is going on. Are we trading in balance? Are we trading out of balance? These multi-day balances that we've been speaking about ever since I started uploading here on YouTube, it's all derived from our TPO charts. So they help us find levels that we can trade off of, but we find levels on our TPO, we find levels on our footprint, we find levels even using clean candlestick charts when you know what to look for. And when we have a whole bunch of levels overlapping, what is that? That is confluence. So if you remember, as we go into step 2 here, I'll read it first actually. Creating a daily plan, step 2, looking at the transacted volume on the daily frame. Lots to take here. Where are buyers? Where are sellers? Is anyone trapped? Yes, we'll go over in today's market recap. So, remember I said time was a crucial factor in the markets. Whoops. So yesterday's session obviously closes at 5 p.m. I know a lot of people consider it 4, but especially like futures, we stop trading at 5 and the next overnight session opens at 6. So I have my charts to close at 5. And if you look yesterday, right into 5 o'clock, we get one more little push, right? We're trading in this range. If you remember, we're trading yourself yesterday. We were consolidating for a long time, and that's what happened over here. We consolidated here for a long time, and that's why we have so many transactions here. So right before 5, we get one more little push, and look where we close, above all these transactions. So what does that mean? Well, oh, sorry, if you have no idea what you're looking at in these charts, pinned to the home of the YouTube channel, I have a quick video that goes over these charts. These are footprint charts, just like TPO charts. They are very customizable. So my video is going over how my charts are read. People have theirs set up and you read them entirely differently and you're looking at different information, yada yada. These are how I have mine configured. Continuing, once we close up here, all these sellers, right? 160,000 contracts, 284,000 contracts, 150,000 contracts, all being sold. What happens when we close up here? Well, their position is in the red. They are in a negative position. So they have to begin to stop out. And what's that going to create? Well, we talk about volume distributions a lot. So yesterday's profile was a very, very clean P-shaped distribution. And what we often see, as we see here, is a bid at the bottom and a selling balance at the top, highlighted by the red and green volume nodes. So when we pull above these sellers, what do you think is going to happen, right? Their position's in the red, they're going to have to stop out, and they're going to cause fuel for an up move. Now the same is going to happen in reverse. If we pull below this P-shaped, all these buyers are going to have to stop out, and they will be fuel for a down move. Now in this case, of course, we closed above them, so it should be no surprise that once the overnight session opened, we gapped up, right? So many people are trapped, and we rip, as you can see. What is this, 60 points in this overnight session so far, 60, 70, and that is why, right? Overnight session, there's not as much volume, it's not as liquid, so for these guys to be able to stop out, it's just this constant grind up until we start to see signs of capitulation to the top side, right? And what is that? That's a P-shaped distribution, right? Now we're not going short off every P-shaped distribution, because obviously, if you would, such as here, you'd be hurting bad. But there's other things that we use, you know, smaller time frames, context, right? We're looking at the market auction. Where are we in the market auction, right? We need confluence between our tools. We're not taking trades just because one tool says one thing, right? Trading's all about risk to reward, as you guys have definitely heard so many times, but it's all about minimizing your risk. So you're not taking a swing trade because we're overextended on a 1 minute chart, right? You need your other time frames to agree. You need confluence. So we know people are trapped, and we could see these higher volume nodes that we have exhaustion at the highs first. Why do we have exhaustion? Or how do we know we have exhaustion? 27,000 contracts, 30,000 contracts, 11,000 contracts, all the way up here until we have 1,000 contracts. Not nearly as many people are willing to transact up here. This is what exhaustion looks like on the tape. So no surprise we start to pull down, and yeah. So let me zoom out and we will continue on. Creating daily plan step 3, zooming into smaller time frame, looking at the transacted volume on the 4 hour. You could clearly see where sellers built a position and where at a certain time they were ran over. I talk extensively in the room about the importance of time. Many traders, yeah, I went over that. All right. So yesterday's session, I think we all could see right here that a majority of the volume was done in this area. Yes. And this little push just around 5 o'clock that I was talking about as this 4 hour candle closed, look at all of the volume underneath, all trapped. Not only that, but look at this, 50,000 contracts, 45, 84, 93, and then down here, even though you can't make out the numbers, you could see that's not even triple digits, less than 100 contracts being transacted down here. Remember, what is that? That is exhaustion. No one is willing to transact down here, so the market is going to go up where we know people are willing to transact. Yes? And that's exactly what happened. Close over them, next session opens, no surprise we gap up. Oh, I found this picture, and what did I say? I found this picture. Man, if this ain't the truth. Want to make this a career? I thought this was really cool, but you guys pause and read that if you'd like. And here was the daily plan going to open, and I said sell zone, sell zone, sell zone, sell zone, very cautious buy zone, cautious buy zone. Now, as of when I started recording and prepping this, it was about, I don't know, 1 p.m., and this was the high day as I started recording, and this was the low day. We overshot this just a little bit, but the daily plan highlighted the high and low of the day. So Onto our live market commentary. This is just before open. I said, look at the daily transacted volume going into open, folks. Do you see participants underwater? You should. Also take a look at that top volume node. It is trying to tell you something. So let's take a look. As we saw in that last footprint picture, the daily, we saw the beginnings of a P-shaped distribution. It wasn't a very clean one. I believe I said that. If you want an example of a very clean distribution, or P-shaped distribution rather, yesterday's price action. Now we have our rules around P-shaped, B-shaped distributions, all of those. I've spoke about them extensively, but we see a bid on the bottom, sellers on top, and price is going to ping pong back and forth between these. And what we see on the tape is sellers adding, buyers adding, and they're going to be adding to their position back and forth and using the order flow, going to our smaller time frames, other tools that we have. We can monitor who's adding more to their positions, who's trying to move up on smaller time frames, all of those things to help us, obviously around the context of the market auction, develop a bias and obviously then be able to profit from it. So we saw sellers trying their hand here, and we're trading up here, right? They're underwater, trying to sell down here, pop above them, right into our sell zone. Now, I did say take a look at this top volume node. It's trying to tell you something. 10,000 contracts still being done at the highs. If we look here, when we reversed, we have exhaustion at the highs. At the lows, we have exhaustion. We do not have exhaustion here. That's what this top node is telling you. It's telling you that the auction is not done to the top side. And so it should be no surprise that once the market opened, we ran the overnight high, right? The auction has to complete to the top side. So I'll zoom out once more and we can continue on. Well, did you listen? Top node said auction was not done, hence why we ran the overnight high. So sure enough, auction was done and we did run the high. So I said, look at that daily, folks. Someone is trying. Watch that top node though. So, sorry, gotta zoom in once again. We start to see, although not the cleanest P-shaped distribution, we're starting to see the beginning of it. But we're still transacting a lot at the highs. Now, this isn't a guarantee 100% of the time we are going to then complete the auction, but I would say literally at 90, 95 times out of 100 we will. And today was actually one of those days where we didn't. We ran the overnight high, completed the top volume node that I was just talking about before from the overnight. We ran it, and we did see exhaustion on our 30-minute. We saw it on our 5-minute, and even a little bit on our 4-hour, but not on the daily. And that's why I didn't take this trade. I didn't take any trades today. I was completely flat. But the trade opportunity was there. But as I said before, trading is all about risk to reward. And when you're doing this as a career, wanting to do this over, many years, in the long run, taking your chances on this trade, when you don't have the confluence between all of your time frames, in my opinion, is not worth it. Once you become consistent and once you can trade, realistically, you just need one trade a week, one trade a month. Now, I do trade most days. I think this is the first day since I started posting here on YouTube that I haven't had a trading day or took a trade in a day. I believe so. So it does happen time to time, and it's okay. There was a time in my trading career where I would get super antsy and I couldn't sit on my hands, and I think I missed the short and I force a lesser quality setup or yada yada yada. But it took me a little bit longer than I would like to admit, but you have to be comfortable sitting on your hands. And right, I didn't take a trade today, so I'm going to skip over that. See what happens when you chase entries. Look at this current 30-minute candle. So this is actually a perfect example. I forgot I posted this. So we're looking at a 30-minute footprint chart. And look, this is the exhaustion. We saw it on the 30-minute. Perfect. Peak above the sellers, run them out. We see the exhaustion completed the or cleaned up this top volume node that we saw and start to sell down. Now what do we see here? We see a selling imbalance. If we know sellers are active right here, who's selling down here? Well, there's going to be people, maybe me in one point of time, who's chasing the short. They're getting a lower quality setup. Maybe they're looking at a 1 minute, at a 5 minute. They see whatever they see, and they go short. And then, we're continuing down. They're trying to short again here. Look how many contracts are being shorted or sold here. And we pop over them, right? This is why we focus on extremes, or at least me. I focus on the extremes, daily inflection points, and if I miss it, I miss it. And these trades offer the best risk to reward, and in trading, it is all about risk to reward. Minimizing our risk, right? Having confluence between our tools, maximizing our reward. Where is the largest moves come from? Daily inflection points that we find on our footprint, our TPO, candlestick charts, yada yada. So this is what I call low slammers. People trying to sell really low, and they provide fuel for an up move, right? They're all being stopped out. Why do we have a buying imbalance here? Because these guys are stopping out. So I said, watch the overlap pivot have been speaking about in the past few weeks, right? This, if you've been paying attention on YouTube, we've been talking about this place. What is this? This is the overlap between this multi-day balance and this multi-day balance. And sure enough, I posted this because I did see a temporary exhaustion into this, and it was a 15-point move. Now, as you know, I didn't take a trade, even though I saw a temporary bid in this area that I knew buyers would try and support. I still didn't take this trade. There was one point in time that I would take this trade, and from time to time I still will take that trade. But again, I'm focusing on the higher quality setups. So that was everything from today. Our buy zone here, I said it overshot it a little bit, but using our higher time frames, we're waiting for our P-shaped distributions, our B-shaped distributions, and once we finally got it, there was 2 members in the room who did take this. I was looking for certain entry criteria. I have lots of rules that I look for my entries. I share them in the room. They were not met, so I didn't take the trade. But there were 2 traders who took it using their smaller time frames on the footprint. One took it for 10 points, and the other trader, I think he entered at 98, and he took his final partial at 16, I believe it was. So he got for 18 points, and the other was from 3,700 to 3,710. He just all in, all out, took his 10 points and ran. So that's today's market recap, and going over the daily plan and live market commentary. So thanks for watching, and I'll see you guys tomorrow in the next recap.